When it comes to income tax in small business, a lot of people don't understand the difference between income tax and instalment tax. And I'll just go through it now so you can understand the key differences. This is an income tax account of a company. So you're running the business through a trading trust and you're distributing out profit at the end of the year to a company beneficiary. This is an example of how it might look. Income of the corporate beneficiary is $100,000, you've got $90,000 of expenses, and you've got $10,000 profit here. Tax rate is 27.5%, so that's $2,750 tax assessed by the ATO on the profit and loss of that company beneficiary. During the year, the company has been required to pay company instalments, which is just tax paid along the way on a quarterly basis, assessed by the tax office. This amount, $2,000, is a cash flow item during the year. It's not what is actually happening for the income tax for the year. It's prepayments on this tax. So these instalments during the year were $2,000, and so what's left to pay on the income tax return is $750. But at the end of the day, the income tax to pay on this company for that particular financial year is $2,750. Income tax is what actually happens and is what gets assessed. There's a clear difference between PAYG instalment tax for companies and individuals, and I'll go through that now. PAYG instalment tax, pay as you go instalment tax, is what the tax office assesses to get their money up front in the next financial year. It's a cash flow item, purely and simply. They want their money up front for the next year. They work out what you need to pay, and then it's cash flow you need to look at. That's the key thing. It's called an integrated client account in accounting speak, and essentially if a company is assessed in the 2018 year $10,000 actually to pay, which is the example I used just before, the tax office will go along, take that number and give an uplift to it of 4, 5, 6%, and then they will say, right, we want $2,625 per quarter to cover what's going to happen in the 2019 year, and this is pure cash flow, folks. A lot of people look at their integrated client account, they look at all of their tax that they're paying and say, we're paying too much tax, we don't know where it's going. When it comes to instalment tax, it's pure cash flow, and the tax office works out what you should pay. What's actually happening in this 2019 year could be completely different. If you're going to pay a lot more tax, doesn't matter, just cash flow and pay that $2,625 per quarter. If it's going to be a lot less because you're going to have reduced activity in the 2019 year, go and talk to your accountant and they can drop the amount per quarter that you have to pay. PAYG instalment tax for companies and for individuals are prepayments only, and they are cash flow items in your business. They are not the actual result. So don't get bamboozled. On the BAS each quarter, you've got GST, you've got your employee tax, which are actuals, and this one here is a prepayment each quarter. Income tax is actual, instalment tax is cash flow and prepayments. There you go. Catch ya.